branch is that you know that the credit sales has been involved. So to know whether those customers have paid the credit sales that I said to them during the year, that is why we do normally adjust for our debtors account. That means in the question we are given the opening debtors. You don't need to do profit cost price here because it is on invoice price. It has nothing to do with invoice or any other thing because it is a real amount. So that is a debtor. We have opening debtor, which is given in the question as this. Then don't forget, debtor is strictly on credit purchase or credit sales. If it is credit sales, we have creditors. But if it's credit sales, we have debtor. If it's credit purchase, we have a creditor. But here it is only credit on sales. So then they have credit sales, which is a 12126. That means there is credit sales. Then the sales, the debtor of the last year, which we brought forward as opening stock in this following year, in the other year is this. So now let us now look if our customers has paid. Now looking at this, they said cash receipts. We receive cash. If you look at the question, you see that cash is received from the debtor. Then there is something we call authorized deduction in selling price. That one is a noise. You don't need to tackle that. You just leave that. Is a noise. Yeah, so don't put it anywhere. Just leave it like that. So we have a debtor. We have a cash received from the debtor. So debtor, our debtor paid from. Then we also have bad debt. The way we prepare a control account, we have bad debt of 129. That means there are some that it is not possible. It is on rare occasion that the debtor will pay. So that one has to be written off. We have a discount, cash discount allowed. That means out of the purchase they allowed some amount to the debtors that maybe based on maybe they bought goods in large quantity. So you give them discount allowed. So it reduces part of the debtor's balance. So now having done this, now let us now look at the balance. They are paid from this, bad debt is reduced from this, and cash allowed is reduced from this. So the balance that they are owing the branch at the end of the day is a 1917, because when you add this, you let it from this, which is a 13872. So if you find the difference, you have 1917 at the end of the day. That is that. Then the last ledger which we are going to prepare is the branch profit and loss. Branch profit and loss account. And don't forget, while preparing, we've already been given gross profit from the branch stocks. So you brought it forward here, gross profit, which is a 7,980. Then relieve those expenses, those likely expenses in the question, so as to know the net profit. You know, gross profit is not the real profit. It is when you relieve expenses from the gross profit, that is when you know the net profit that the branch has at the end of the year. So now let us look at the expenses items. Here we have a discount allowed. Discount allowed is an expenses, which is a 348. Then we also have bad debt. We have a bad debt of 129. Do you have? I don't think we have any general expenses. We don't have, and we don't have any other expenses like that. So in the course of that, we find our net profit. So let's add this and find the difference. So our net profit here is 7,503. So if you add it together, you have 7,980. So that is a method. That's how we prepare cost price method. These are the necessary journals that we prepare if a kind of question is given. The next thing we'll be talking about is government accounting. As we all know that we talk about under financial accounting, we talk about different branches of accounting. So as we have taxation, we have financial accounting. Likewise, we also have government accounting, in which the public officials are expected to account for the treasuries of government entrusted to them. So under the things, we have only one topic, which is public sector accounting. Now, what is the public sector accounting? Public sector accounting is a process. Like we all know that, as we all know, the accounting is a process. But on the side of the public sector is the process of recording the financial transaction involving the receipt and disbursement of government funds in a systematic way for analysis and interpretation. And the way we prepare government accounting is also the same thing like accounting, but there is a little difference in there. What government accounting always wants to do is to that is the receipt side. That means it's recording involve only the receipt and disbursement of government funds, and that is the aspect of government accounting. Now, we're talking about the importance of government accounting. Why is it important? Why must we prepare government accounting? Number one, it is for decision making. Having prepared public sector accounting, which is government accounting, then it helps the government to make quick decisions on their planning. Then it serves as basis for controlling expenditure and revenue. It's another basis to know the revenue that's coming into the government and the expenditure that is being disbursed during the year. So it helps them to control when there is too much expenditure, then they control it through the government accounting. Then it helps to ascertain the expenditure of the government. You can, from government accounting, you can easily know the total expenditure that the government spend. The government spending during the year. Then the next one is shows the various sources of government revenue. With a public sector, you can easily know or ascertain the source of government, where the revenue that government are derived, where they come from. Maybe from the oil, maybe from the tax, maybe from any sources or grant, and so on. Then another thing is for planning purpose. As we all know that government has its own planning, and every government will only plan for they are planning on behalf of the citizen. So with public sector, it's help government to decide on budget, and having known the expenditure and revenue that are coming, then they use it as a planning purpose for them. So that are the importance of public sector. Then before we go to the calculations and other things, let's quickly go to the difference between the government and the private sector accounting. First one is the accounting procedure is based on provision of service. As we all know that the duty and the responsibility of the government is to provide the social amenities and the infrastructure facility in terms of building of borehole, building of schools, classrooms, providing essential materials to the citizen. So public sector accounting is not prepared for profit motive, but it is just to provide services for the well-being of the citizen that is living within the country. Then the next one, that of the private sector is it is based principally on profit maximization, and that is the purpose of establishing private sector. It is established in view of profit, and profit is the one that can keep a private sector going. Then the next one is it does not show creditors. But in private sector, it shows creditor for goods. When we talk about the accounting basis, we have the two accounting basis, which is the cash basis and accrual basis. But government sector on the side does not use accrual basis. The government sector only use cash basis. So whereas private sector use both cash basis and the accrual basis. So in that case, it does not show, you don't show any creditors at all or debtors at all. Any item transaction that was being done by the government, it is done on cash basis. So it shows creditors for goods on the side of public sector, because public sector based on the cash basis and the accrual basis. Then the next one is the revenue is derived from tax, fees, fine. And that's why we say that it is the duty of government to provide essential material services for the citizen. And they can only derive those revenues from tax, with the taxes that people pay, maybe SITA, personal income tax, then company income tax, then fees, fines, and other revenues. That is where government derive their own revenue and redistribute it to the citizen. I mean, even distribution equally to the citizen of the country.